This podcast is sponsored by askROI.com.
The political side of it, and then there's the real story.
There's a lot to unpack right there. It wasn't quite the interview I thought that was going to be.
There's a reason for it.
This will be officially my favorite podcast I've ever done.
You know, it's funny. You and I going around the same circles. You're a lot more famous than I am. And I'm trying to put myself into how long I've known you or known of you. But I started on Wall Street in, I want to say 1990, 91. When did you get started?
So I'm older than you. I started in 81.
Wow.
I came down to the trading floor September of 81. So it is right now, probably right around today, the middle of September. It's probably 43 years ago, Todd.
Wow.
So I was lucky enough to be playing football for the Bears. When they figured out that Mike Singletary was a little bit better than me, I got cut. So I got to play 4 games, got cut, and I loved Chicago. So rather than going back to school, I figured, okay, because I was going to be an architect. Then I found out they didn't make enough money. So I said, screw that. If you're really happy being an architect, folks, stay with it. But I was looking for something, if I'm good at math, I could be an engineer. And as it turns out, instead of an architect, I could be a trader. And
Sure.
So luckily, Chicago was loaded with traders back then.
I, ran a hedge fund for many years, and I use a lot of option strategies. And options are just math, and they're not complicated, but they're scary to people. And John, you guys have made it so that it's not scary. And a lot of times when I'm thinking of a strategy around options, I go to look and see what you guys are saying about it. And I remember one of the coolest things that I think you guys had, and I'm just going off of memory here because I worked on Wall Street for 34 or 35 years, and my hedge fund was very active in selling naked puts. We sold a lot of calls. And on 9/11, I had notional risk of maybe $7 or $8 million of puts. And that 4 days that we were halted after 9/11, and the subsequent, the wake up afterwards, I worked with a really super smart option guy named Kyle Rosen, and brilliant guy when it comes to options. And options have kind of transformed the way I have done business in terms of my hedge fund. And I've been long the options market with NVIDIA. And I wondered if you could talk, I want to start at the beginning. How could someone learn about options through you? And it's not a commercial for John. I'm a huge believer in using options as a strategy, but you've got to know what you're doing, or you can get yourself murdered, right? Hey, like any financial instrument. But I've seen, early in my career, I saw Buffett using options, talking about the things he did around options, especially, and I want to say this, people don't know about this, but when Buffett, when Susie moved out of the house in Omaha and moved to San Francisco, Buffett was getting paid from Berkshire Hathaway, but he wasn't taking a lot of money out of it, and he actually needed to make some money on his own, and is quite the good trader, and traded for his own account and paid, it's buried in some of the books, but he used options and trading to basically make a living to afford a second household. Now, he was probably being an aw shucks moment where was he really doing that? But he's really smart with options. As you've seen, he builds in some warrant coverage when he does these big deals like with Occidental Petroleum, which is a form of an option. So I wondered if you could talk to people about how they can learn about options through your program, Market Rebellion.
Sure. And you're right, Todd. The Oracle of Omaha is one of the largest options traders on earth. I don't know anybody bigger than him, actually. There are probably people that are more active, but when he gets into a position, he builds millions of shares worth of positions. Every option, folks, is for 100 shares. So when Todd and I are talking about that, it's for 100 shares. So if Warren Buffett buys 10,000 options, just add 2 zeros to the end of it, that's 1 million shares worth of whatever. And frequently, when he tells his guys to start accumulating Occidental, Apple, whatever it might be, Burlington Northern, which he ended up taking private, any of those positions when they were public, he's in there, he's selling puts, and he's buying calls. He's doing just what Todd was talking about. And he calls them weapons of mass destruction, which is kind of funny because it's his biggest trading strategy. Now, he selects his stocks differently, and you need to do that, of course. That's very important. If you're selling puts, it needs to be on a stock you're comfortable owning, because you could get put the stock. It's an insurance policy. So is it any surprise to you or me, Todd? The answer is already no.
Right.
It's no surprise to us that a guy that understands insurance understands puts. And puts are just the downside of calls, folks. A put option gives you insurance to protect an asset at a certain strike price for a certain period of time. And obviously there are two sides to every trade. So some people are seeking protection. Other people are, like Todd just described, looking to say, you know what? I'm okay owning NVIDIA at 95. So it slammed down there on August 5th, slammed down to 91 actually, and a little bit below that. But Todd might go in there, or I might have gone in there and said, sold. I'm going to sell a whole bunch of these puts. I'm taking on the obligation to insure from 95 all the way to 0 that particular asset for some period of time. But the reason you do it is because you are comfortable owning the stock, and you think that for the time being, the market has mispriced the risk in that stock, which it clearly had, because we touched down there and it went straight up. It was one of those V-shaped bottoms where it goes down and then goes straight back up. This is August 5th when the market dropped 1,000 points. And a lot of us, I think, were selling puts that day. And a lot of us might have bought calls. And to your point, Todd, the call buyers are setting themselves up for a big upside bet, whereas the put buyers, the buyers of puts, are setting themselves up for either a downside bet or protection. I put my hand under it because it's like, okay, here's protection. That's as low as it goes for me if I own insurance on my Ford or on my Mercedes-Benz. I don't have to worry about, well, somebody stole it. Okay, well, I'm fully insured. I have $500 deductible. Take it. Don't bring it back.
Let's give people the example of one of the greatest protection trades around. I think it's one of the greatest. You may not agree, but I think that you and I were around for Yahoo buying broadcast.com. And if those of you who don't know this, during the internet boom, Mark Cuban and his partner, I believe it was Todd, his name was Todd, his partner, ironically, they sold their company to Yahoo, which was broadcast.com, which allowed people to listen to programs and radio stations all over the country, all over the world on broadcast.com. And Mark Cuban was smart enough to say, I've got $2 billion worth of stock. I'm going to sell calls against it, which means that people could take his stock away from him if the stock price went higher for Yahoo. But he also used that premium he got when he sold those calls to buy out of the money puts to protect his position. I thought maybe you could check. That was one of the greatest trades, and this is an example of he gets this big position in Yahoo, and he's fearful it's going to go down. Can you talk about that a little bit?
Sure, and you've done a great job setting it up. Yeah, he gets $2 billion worth of stock, pardon me, and it's more money than he's ever imagined. And he says, you know what, I want to protect it. So what does he do? He goes out and buys puts. But those puts, those out of the money puts, like Todd said, they may have cost him, just pick a number, I'll say $5 a piece, which in option parlance means $500, folks, because again, every option's for 100 shares. So if he has, for instance, 200 million shares of Yahoo, he needs to buy an awful lot of puts.
He sure does.
And to pay for it, he's going to sell upside calls because he's saying, you know what? If Yahoo goes up another 10%, great. They'll take me out of all of this stock that Yahoo gave me. And meanwhile, and that's great because it's another $10 higher than where I'm at right now. But on the other hand, if it goes down, what I don't want to do is wake up poorer than I am right now. I'm fat and happy with $2 billion worth of stock. I'd be much more comfortable with $2 billion worth of cash. So what am I going to do? I'm going to put on a put. Again, my hand's like this. I'm protecting my downside, and I pay for it by selling those upside calls. Todd and I would call that a zero-cost collar because it costs you nothing. As long as the calls I'm selling give me the same premium as the puts that I'm buying, I don't have any out-of-pocket costs. So it was one of the smartest trades that a young entrepreneur ever did. And I think Mark has talked about that several times as probably being his best trade ever, even with the Dallas Mavericks being thrown into the mix.
For sure. Yeah, Jon is one of the premier guys around to teach people options. I've been, and unfortunately we're going to give our age out. I'm going to be 55 in December. I've been following you for a long time.
I'm 67, so maybe you have.
Yeah, I've been following you a long time. And I remember a weird thing, I recall, and I'm just going off of memory here, but I thought I saw you on TV talking about unusual activity a lot. I know you had a proprietary way of knowing whether something was unusual, and I used to really pay attention to this unusual activity. You guys would come out and speak about it on CNBC, and now it's Fox, but you seem to really understand the unusual activity. And I know that you got to pay to be a member to get that, but I of course will make sense, right? Because it's a premium product. But could you talk about unusual activity, and then specifically, and this is the downside of this, and I don't mean to be negative, but like you guys saw a lot of unusual activity before 9/11. Was that just a coincidence, or did you think that there was really someone in the know about what was going on?
Oh, it was definitely someone in the know. And what Todd's talking about, folks, is more or less what proved to the rest of the world. We knew that what my brother and I had created, my brother Pete, he and I created something we call the heat seeker. And the heat seeker is looking for large institutional, Warren Buffett-sized blocks of options. And when we see that, because we don't care about what, more or less what any of you do or what I do, what Todd does, even if you're running a hedge fund, unless you're Stevie Cohen at 0.72 or somebody really big, I'm probably not seeing and or following your trades because our system is set up. It's looking for blocks of 500 contracts or more. And then there could be, some reasonable reasons that people are buying or selling 500 contracts. Again, 500 contracts, folks, is 50,000 shares of stock. It's a lot of stock in most cases, especially with stocks now in the hundreds of dollars. When somebody trades 1 million shares of stock, that's 10,000 options. I really pay attention to that. And going into 9/11, the 3 days before the terror attack, there were a lot of puts being bought in American Airlines and United Airlines stock. And so we saw that and we were like scratching our heads thinking, well, maybe this is a downgrade coming from Bank America or from Merrill or from Goldman Sachs, from JP Morgan. Maybe they're going to downgrade the stock and they're getting ahead of it. Because believe it or not, sometimes things like that happen on Wall Street. People tend to trade, or maybe it's Nancy Pelosi, or pick a Republican. Maybe it's Mitch that's buying those puts, because they do all the time. Members of Congress are active traders, folks, and it's always been kind of something that sticks in my craw that they can buy on inside information. But if any of us did that on the information that they have, we'd go to jail. They'd give us a get out of jail free card. Nope. They'd say, you're going to jail. But they get a get out of jail free card. So anyway, 9/11, probably the 7th and 8th of September, leading into that weekend, there were active buyers of those puts. We don't trade on the weekends, of course. So all of a sudden, Monday and Tuesday come around, and some terrorists fly those planes into the World Trade Center. The planes they used were United and American aircraft. All of the planes that they picked, for whatever reason, you could have said, oh, let's get some Delta, let's get some Southwest planes, let's get whatever. Nope, they picked American and United, and those were the only puts they bought. So that's kind of suspicious right there.
Weird. Yeah.
And then, of course, when the markets were closed for 4 days after 9/11, we didn't open again for the following 4 trading sessions, folks. When we finally reopened, both United and American had fallen from roughly $30 a share down to $9 a share. But it wasn't just those stocks, of course. The whole market fell. So thank goodness, Todd, the terrorists weren't any smarter than they were, even though it wasn't probably the guys on the plane. It was probably whoever paid for them, whoever helped them. It was probably those who profited. But we gave our data to the FBI, because back then I had a trust of the FBI. I don't have the same level of trust today that I had back then.
Sure.
But we gave them the data and we said, hey, you might want to look into these trades. And so I was having conversations back and forth with FBI agents explaining to them what options were. And, well, why are these special, John? Well, because they only use these 2 airlines. They bought them just days ahead, and they bought huge quantities, like 30,000. That's 3 million share equivalent from 30 all the way down. And they got huge leverage on these trades. And so we figured, well, somebody made a lot of money on this. You should probably look into it, because believe it or not, before that, people had made a lot of money in that Tylenol. You know how we have the twist tops on the aspirin and things now?
Yeah.
Well, the reason we have that is some jerk, some terrorist, and a domestic terrorist, put some sort of arsenic or something.
Cyanide. Yeah.
Thank you. In I think it was Tylenol or something like that.
It was.
And then basically, once people found out about it, that stock dropped like a rock. Well, that's a terrorist attack, but his intention probably wasn't to kill millions of people. It was to scare all of us and for that stock to go down. So this kind of thing has been played out. Even Hollywood likes this, apparently, Todd, because in Casino Royale, with the new James Bond, that Casino Royale, Daniel Craig, he plays 007, and he's trying to stop terrorists from blowing up an Airbus. And the terrorists have already bought a whole bunch of puts, $100 million worth of puts on the Airbus. And when he foils their plan, of course, all those puts vaporize, and then you get to the second half of the movie. I won't spoil it for those of you who haven't seen the movie.
Well, it's a Bobby Axelrod moment. He did the same thing with that whole juice company that went public, and same scenario, where it can dramatic.
Love Bobby Axelrod, by the way. That's a great reference, Tom.
Yeah. This is the part where I told you I get a little nosy, but anytime, and I want all of our listeners to understand that, this is real money, especially back in 2016. You and your brother sold your Trade Monster for $750 million, I believe, to E-Trade. Did you get a check, or did you take stock?
I wanted stock. Truth be told, I didn't want to sell, Todd. And now my friends, they're still my friends, but a number of people were investors with us. We mainly went to friends and family. And then in 2014, we went to a private equity firm, General Atlantic. And for those of you who don't know private equity, they more or less leverage up on it like crazy. They ended up coming in with us $350 million, but only about 25 million of that was their capital. The rest was borrowed. So that's the leverage, that private equity uses, folks, when they do deals like this. And then 2 years later, like Todd said, we sold the company for $750 million. They gave us a check or a series of checks, but I didn't want even the check. I just wanted their stock. Because if they gave me their stock, Todd, I wouldn't have had to pay taxes.
Sure.
By giving me a check, because I wouldn't have sold it. I would be exchanging this asset for that asset. So that's a non-taxable trade, if you will. But like I said, I didn't want to sell it. I said, I just want your stock. And unfortunately, E-Trade was not willing to do that. And my partners wanted the money. And so that was ultimately sold, I think, a year or 2 years ago to Morgan Stanley for like, I forget, $4 or $6 billion.
Yep.
So
hold on a second. That tax strategy thing, I got something coming through here. Hold on a second. I got John Malone saying you fucked up. Because as you know, Liberty Media was built on the back of John Malone, avoiding taxes at all costs, taking stock in all these deals. So I heard you channeling John Malone there, but you didn't get that.
I wish I could have.
Yeah.
Number one, I liked the company. I liked E-Trade. And number two, I would have done the Mark Cuban. I would have bought a put against E-Trade. I would have sold upside calls. I would have got called out at a higher price because the stock did keep moving higher. I would have got called out at a higher price, but Todd, I wouldn't have paid the tax in 2016. I would have owed it a year later in 2017. And I probably could have figured out some sweet things to do with it before I owed the tax.
So you say you're 67, you've done a lot of deals, and you're still out there pitching and doing things with Market Rebellion. I think option trading is done by someone who understands risk and understands it. But how do you guys educate people? Like, if someone comes to join Market Rebellion, what do you suggest that they do? I know you've written a lot of books, so like walk us through. I'm an investor. I'm 50 years old, and I got a $2 million portfolio, and I want to learn about options. Show us that book again, and can you pull that up again? And how do you walk? It's not an option. How do you walk someone through the idea of if they're just a beginner in options? Because I have myself in my whole career done a lot of crazy stuff around options. Some stuff like having, I don't know, 8 million of notional, 6 or 8 million of notional value on puts the day of 9/11. All that premium felt good the prior, 2 years. And that one day, that premium didn't feel so good.
Right.
I'm curious as to, now keep in mind, guys, I was writing naked puts. And that means that I was acting as the insurance company. And I was making about $400,000 or $500,000 a month, pretty much every month. And because the market was in a bull market, so no one was putting their stock to me, and I could roll them into a new number, and I was constantly chasing premium. And the market will teach you a lesson every so often. So how do you educate people now?
Well, as you know, we used to have probably 6,000 traders in the United States. Most of them on trading floors, some of them on trading desks upstairs. That has gone away. Not completely, but at most, it's 1/10 the size that it was. And all of the trading floors except one, I think, are gone. The New York Stock Exchange, great place, but there's no trading there. It's all down in the data centers. People key in trades down to the data center, and that's where the buyer and seller don't meet on the floor anymore. They don't meet except in Chicago. The CME and the Chicago, what do they call it? CBOE Global Markets now. There's still traders on the floor in those two places, but again, they're about 1/10 of the amount of traders that there were previously. So to answer your question, that means there's a lot of former traders out there, a lot of them that were, that garnered some hard-fought expertise on trading. Those are the guys we hire. We hire those men and women to be the mentors, the coaches, the educators for anybody that wants to learn about trading. So we've got a team of probably 30, 35 people, Todd, that's all they do is they teach people the right and wrong things about trading. They tell them about which ones are the wrong ones so they don't do it. And they said, okay, would you rather learn on your own by making mistakes, or would you want me to tell you, don't do that, don't do it? Just like to your kid, don't put your hand on the stove, it's gonna hurt.
Right.
They will say, don't do certain things. Now again, Todd was an experienced trader, Todd Ault. Todd was also running a hedge fund. So he had a lot of money behind him and a lot of knowledge, and still he got burned. And all of us would. There's not a person listening to this that doesn't have some losses from time to time. Doesn't matter if you're trading stock or options. If you're wrong on the direction, it's going to hurt. But there are ways, especially with options, where you can eliminate a lot of the really bad pain and just have minor pain. In other words, like I said, you've got to be right on the direction, unless you're just selling straddles, which is a combination of the call and the put. And you're saying, I think the market's going to stay in a fairly tight band, somewhere between $58 and $62. Okay, as long as it does, I'm going to make a lot of money. And outside of that, maybe I buy an upside call and an upside put to hedge myself, so I don't just have unlimited exposure. The bad news is, had Todd done that, he would have only been making $200,000 or $250,000 a month, which, was still great money, but he wanted to get his investors the best return he could. That's what we all want to do. And so occasionally you're going to get burned. But again, you could ask him, folks, if he had bought a put underneath the puts that he sold. So he sold these puts for $3. If he'd bought an out-of-the-money put for 50 cents, he'd only make $2.50 when he's right. But on the downside, he wouldn't have got hit as hard as he did.
Yeah.
That's one of those lessons that you just learned. And I'm sure most of the time now, when Todd sells out-of-the-money puts or out-of-the-money calls, he has a little more protection.
Oh no, I'm a lot more risk averse when it comes to writing.
Because now you're a rich man.
When it comes to writing naked puts and naked calls, although I still do them, there's no question. Yep. I've been writing calls on NVIDIA, but really when it crossed the $3 trillion mark, I kind of thought, my barometer is when things get just too hot and that everyone's talking about it, and like the cab driver, the Uber drivers long NVIDIA, everyone's long NVIDIA. There's a day and time where that story's played itself out a little bit. And I recall that, John, because if you recall during the lost decade for Microsoft, after Microsoft lost that antitrust case, they spent a decade really not really going anywhere. And now, of course, it's a stellar performer. But you could write against Microsoft for a long time. And of course, the volatility died down, so the premiums died down. But I'm fascinated by what you do. How many people do you educate a year?
Let's see. Since 2016, we've educated a little over 300,000. So I haven't actually broken that down, but it must be, let's say, 50,000 a year maybe, or something like that. And that's not all from actual beginner all the way through to advanced. People pick where they want to start. Some of them are already intermediate, if you will, and they just want to get a little more solid. Some people are intermediate moving to advanced, and they want to get even better and make it a full-time vocation. I mean, when Todd was doing it, folks, a hedge fund manager is trading pretty much every day.
Sure.
Even if he's selling puts, he's probably finding a different situation every day that he wants to take advantage of.
So how does someone like that do that today? Do they just go to Market Rebellion? I see you on Twitter, but where's the best place to go to follow what you're doing? Like, what would someone today who wants to learn about options or trade options or incorporate them, what should they do right now?
Yeah, we'd welcome them at Market Rebellion, just marketrebellion.com/get started. And they can see all the different offerings we've got, because we've got private lessons, if you will. That's like having a mentor. We've got coaching, which is like a group lesson if we were talking skiing or tennis or whatever. and you're in a group lesson, well, you're looking at whatever, 5 or 15 or 20 different people versus one-on-one when you're in the coaching or the mentoring phase. So that's what they would do.
Well, you're going to be at the conference, which is great. You're going to be at the RiskOn360 conference, which we'll come back to.
Okay.
So I learned a little anecdote about you. You went to school with Prince, who doesn't love Prince, right? To quote Julia Roberts.
Well, maybe you could be mine. You just leave it all up to me. Don't you just love Prince?
More than life itself.
I'm curious as to, did you know him or did you just go to high school with him?
Oh, yeah. Knew him well. When I found out that he died, I was nearly crying on air because he was a friend. And I knew that he had some people would say demons. I wouldn't say demons. He was a Jehovah's Witness, which a lot of people might not know. And certainly he was never really preaching to me about Jehovah's Witnesses. I just knew him as a friend in school. But he'd get up on stage and play the guitar with his band that was called The Time. And they were hugely entertaining, and people couldn't believe how good he was in high school, but he was. I mean, he was a phenom. And then as he was not a very tall guy.
No.
And so his brother, Dwayne, was very tall, a great basketball player. Same mom, different dad. And Dwayne was, I think 6'6" or 6'5". Prince might have been 5'2" on a good day. He was not very tall. And for that reason, he wore high heels all the time. I'm not talking lifts. And again, I'm not talking bad about Prince, folks, but I'm setting it up for this. He wore high heels for so long, platform shoes and high heels, for so long that he basically was ruining his hips and his back. As many women who perhaps wear more high heels than men would say, yeah, it ain't easy if you're in them a lot. And it does hurt your back, it does hurt your hips. Unfortunately, being a Jehovah's Witness, he could not take blood. And a hip transplant is a very bloody operation. My dad was a transplant surgeon, so I knew firsthand that there's a lot of blood necessary when you have a total hip. And he needed a total hip. So he was saving his own blood because apparently that's a hack in the Jehovah's Witness group. I'm not an expert, I'm just saying what I heard. But he was saving his own blood so he'd have enough that he wouldn't have to take someone else's blood during an operation. But he was in so much pain, Todd, from those hips being so broken for so long that, he was taking too much in the way of pain reliever, and ultimately it killed him. So it was very sad. Like I say, when we learned of that, I was on air and I almost broke down when they were asking me about it because it was very emotional, very sad. Because here's a Minnesota kid. I grew up in San Francisco till I was 12, moved to Minnesota, and because my dad was chief of surgery and he took the job in Minnesota, so the whole family moved. So I ended up going to school, being bused into a mostly black school in Minneapolis, and didn't dislike it at all, loved it. Probably till I went to college, a vast majority of my friends were minority students, and they were fabulous. I had a great time. I was one of just a couple football players on the team that were white.
Are you
But we had a really good team.
Are you Armenian?
Yes, sir. Yeah, Armenian and Swedish.
I'm going to tell you a story that my very first client ever when I was at Dean Witter was Armenian. He called me up on the phone and he bought 1,000 shares of IBM at 54 5/8. And
Nice.
he paid, I gave him a 49% discount, and he paid like $450, $500 to buy 1,000 shares back in the days when things were more full commission. And,
Oh, yeah.
and I developed an Armenian following because of him. And Glendale, California, I grew up in Orange.
That's where they all are.
I grew up in Orange.
Glendale and Fresno.
I grew up in Orange County, California, and Glendale wasn't that far. And I ultimately had 2 lawyers that worked for me that were Armenian, and my idol pretty much. I'm not supposed to say the word idol because I think it's the wrong thing. It doesn't really play out well. But as a kid, when I was younger, I was very poor. But my aunt dated Kirk Kerkorian, and only for a short time when she lived in Las Vegas, and he was, I think, single or between wives or whatever. And I became a massive follower of Kerkorian. And I live in Vegas. One of the reasons I live in Vegas today, it's just the notional idea of me. I grew up Greek Orthodox, and a lot of Armenians that didn't have an Armenian church went to Greek Orthodox church with us. And I have I could probably talk to you for hours about the idea of the struggles of Armenians and what happened over time, genocide and stuff like this. But I'm curious because of you and your brother, and you said your father was a surgeon, chief of surgery, and I'm digressing a little bit, but to prove a point, which is it seems like my experience is there's a generational gap or something where Armenians were very hard workers. They were very dedicated to their family. And nowadays, I'm going to bring up this whole election that's happening. What do you think is happening, evolving with our country right now where obviously it's the greatest financial capitalist business in the world. I mean, I think capitalism is made, I grew up with nothing. Like I grew up in HUD housing in Fullerton, California. And obviously your dad being a surgeon, you might have grown up a little different than me. But I'm curious as to what you think about what's going to happen and how you're playing the markets with the Harris-Trump election. Where do you stand on what's happening? Like, got any guidance for someone who doesn't know what's going to happen?
Sure. Well, it's going to be close. And it'll depend, of course, on, I'm not telling anybody here anything they don't know. It's going to be close. If the Republicans come out and if enough people are upset, as I think they are, because wherever I travel, Todd, and I travel a lot, people are not happy. And you guys listening to this know probably something called the Rule of 72. The Rule of 72 is if something is going up at 10%, it will double every 7.2 years. And the same is true in the inverse. If you're earning 7.2%, you're going to have to double your money in 10 years. So, obviously the higher the interest rates or the higher whatever it is that we're talking about, the quicker it doubles. So when you're running at a 9% clip, which we were running at, and then it came down into the 6s and it was sticky there, and then inflation I'm talking about, of course, and then it comes down into the 5s and so forth. Those numbers are why we had 20% food inflation and gasoline prices to the sky and all this other stuff. So it wasn't just the social programs, it was throwing too much money at the markets, throwing too much money at individual investors, basically just sending out money because people weren't working, so they were sending out money. And I would say, Todd, that has resulted now that they've stopped sending out that money in a lot of Americans really struggling. So that's why I say, Todd, that I think Americans are kind of fed up with what's happened over the last 4 years. So my bet would be that President Trump wins, even though it's going to be a close election. And the fact that they've been 2 now assassination attempts on the former president, I think that continues to focus people on, well, why do they want him out so bad?
Yeah.
And I'm going to say, Todd, that if Trump wins, you want to be long Bitcoin. It'll move the most of anything because he is a big supporter of currencies, digital currency. Kamala is not. Ms. Harris does not like Bitcoin or Ethereum or any of the derivatives of it. The only one that they like, they being the Democrats, are central bank digital currency, CBDC. And Why do I dislike that if I like digital currency? Well, I like digital currency, and I like the fact that it's decentralized. What I don't like about CBDCs is that the government can shut it down at any time. The government can tell Todd, you can't spend your money, just like they did in Canada. That wasn't through CBDCs, but somehow the Canadian Prime Minister Trudeau got the ability to basically, anybody that sent money to those truckers 2 years ago and so forth, they basically had their bank accounts shut down. They had their credit cards shut down. Well, that's pretty scary prospect. Now, do I think that could happen here? Not as easily as it happened there, but if we had central bank digital currency, CBDC, I think then they can tell you what you can spend it on, what you can't, and stop it like on a dime.
Yeah, so I think the idea of a central bank currency, and it's a misnomer because people think today, well, don't you have it with Zelle? No, because the government has to go in and get an order to shut down your bank account. Today, right, with a central digital currency, the government would know everywhere you're spending all your money. And not find out anyways, but there's a little bit of a process to get that done.
This podcast is sponsored by askROI.com.
So you're going to be at RiskOn conference. Tell us what you're going to have there at the conference. I know you're going to do a book signing. You guys are going to do a keynote address. What will happen at the RiskOn conference? What can people expect to hear from you guys?
I'm going to be there. Business partner and the CEO of our firm, Mark Lopresti, is going to be there. It's going to be what it's been in the past. A great opportunity for people to listen to practitioners talk about everything from cryptocurrencies to options to trading stocks to trading warrants and things like that. So I think we're going to have a pretty interesting lineup that's going to be there at Todd's event. And I can't say enough nice things about it, Todd. It's going to be fun to be there. The only thing is it won't be 116 anymore. It'll probably only be like 85 in November.
Well, it's F1 weekend, so we're going to have a viewing party on Saturday night. Then we start Sunday a little bit later in the day because obviously we're out the night before. And then we got a Monday, Tuesday event. It'll be fun. I'm excited for you guys to be there. I love your educational program. I love what you're doing. I wanted to ask you on your way out, though, do you see a lot, what's the request like versus sort of the boom of maybe the meme stocks? Where are you guys seeing in terms of people's education? Are there a lot of people signing up? Has it tapered off a little bit? I mean that because I'm trying to gauge your thoughts on the market and the number of participants. Not the 401k participants out there that put their money in every day, but just the number of people you're educating. Are you guys setting new records in terms of people joining? Are you moderate? Where are you right now in the cycle?
Well, and that's one of the best questions you've asked today. They've all been great, but this one's the top because folks, when I started in this business in 1981, we traded 400,000 options a day. And people were surprised. I was finally just going on the board of the CBOE, it used to be called back then. Now it's CBOE Global Markets. But I said, we're going to trade 1 million options a day, guys. It's just a matter of time. And sure enough, in the 90s, boom, we got to 1 million a day. Now, today, this year, we're averaging, I think, 48 million options a day.
Wow.
And if you wondered why, folks, here's why. Because so many of you are learning about them. So many of you are listening to people like Todd and people like me that have said, I built a career on this. You can build a career on this. I mean, for instance, Todd, here's a good one. I had a client. I don't trade for people, but we have people within our firm who do. The reason I don't, folks, is it wouldn't be right. The SEC would investigate me all the time because they'd say, well, is this appropriate for you to be saying this? You're talking your own book and blah, blah, blah. Like, oh, when Carl Icahn comes on, he doesn't do that. When Mark Cuban comes on, he doesn't do that. All these people do.
Yeah.
But just to keep it myself out of the sights of the SEC or FINRA. I don't trade for people. But we had a client that came in with one of our guys, and the client said, look, I've got a lot of money. I want to put $1 million on NVIDIA. What do you think? And I said, okay. Once we determined that it was somewhat responsible for him, he had $200 million. He was opening an account with like 50 million in it for himself to trade. So he said, what do you think? What can you make if I say I just want to own NVIDIA? And I said, okay, if you bought $1 million worth of NVIDIA, this was last week, I did it on a webinar, Todd. I said, if you bought it here at 108, you could buy 90,000 shares. Okay, it's a pretty big amount, but you'd buy it like that. It wouldn't take you any period of time.
2 seconds.
So you buy it, and then every month we're going to sell you $4 out of the money above where the stock is. At that time it was 108. We were selling the 112s. We're going to sell the $4 out of the money calls. And do you know how much money you're going to make every month? And he said, how much? And I said, $485,000 a month. What Todd used to make.
Yeah.
Because you're collecting $5 for that out of the money call. Again, every option's for 100 shares. So that's $500 times 90,000 shares. So you guys tell me, how much is $500 times 90? Well, it's what I said. I misspoke. I said 490,000. I think it's 49,000.
Right.
49,000. So it's only a tenth of what Todd used to make.
Sure.
But you sell that every month, and then at the end of the year, there's going to be some months when we have to buy those calls back. There'll be other months where they go out worthless. Other months where we roll them up and we just keep selling a higher and higher strike as we buy back the ones that are expiring and so forth. So I said, you're going to be somewhere in the $400,000 to $600,000 return on your $1 million. And he just sat there and he said, okay, why don't I do that with all 50 million? And I said, well, you want some diversification, sir.
Sure.
And again, I am not all of your financial advisor to all the people that are listening. I don't know, what's appropriate for you, but I can tell you, if you had $100,000 and you were doing this, you'd be pulling in almost $5,000 a month times 12 months, $60,000 on a $100,000 investment. That sounds pretty good to me. So those kinds of things, I think, Todd, you and I should talk about on stage, along with central bank digital currency, along with Bitcoin, and with some hedging strategies as well. And it'll be a great conference, folks. The RiskOn360.
It will. There's no magic bullet, though. I mean, when you're selling options, when you're selling puts, when you're selling covered calls, there's no magic bullet. You got to do the education. You got to be educated. I tell this people come to me all the time and said, can I just do this with you? I said, no, because I'm not here to educate you. But guys like John R., Market Rebellion, check it out, marketrebellion.com. I appreciate you, John. And by the way, I'm not getting paid by John, not yet at least. I hope someday I can partner with him on something. But
we'll find something.
I am a believer in options. I'm telling you things that I use every day. In fact, just today, I was looking at options for a bunch of different stocks, including the video, which I covered yesterday. So, John, I appreciate you being here. I love what you're doing. Keep doing it. Hopefully, you can keep educating people. And I'll tell you,
got to go out and grab a nice steak in Vegas too, Todd.
For sure. I'll tell you one thing. You guys need to know this, and that is, people will spend more time planning their vacation than they do their financial life, and especially if you got money in the market, you should absolutely learn about these different strategies. They can be exciting, especially if you're looking to get extra income writing covered calls. I'm always a believer in that. I don't know that I've ever wrote a covered call that I regretted. I've got them taken away from me, but you're always making a profit generally when you're writing a covered call because you buy something at one price, you sell it at another, and you get that premium while you wait. So there's a lot of opportunity out there. Volatility is your friend when you're writing options. I look forward to seeing you, my friend.
I look forward to seeing you and everybody else.
Take care, my friend. Be well.
This podcast is sponsored by askROI.com.
I'm going to explain to you real quick. Don't let rolling out. There's a reason for it.
So I did get that right. I did get that right.